This is the MTPredictor Weekly Market Update for March 16th. So a lot of ground to cover, hopefully in about 15 minutes here. Little backdrop. We've got a options expiration Friday ahead of us. It's quadruple witching. That's when your stock index futures, your stock index options, stock options, and single stock futures all expiring on Friday, and it causes that added more than normal market volatility. Now the tendency is that markets like to rally into options expiration. I don't know what the stats are exactly into quadruple witching, but we'll take a look and see. Also this week we've got a Fed meeting Wednesday, the announcement on interest rates. Obviously that is a market mover, so it looks to be maybe quiet early in the week, and then things really should pick up midweek. All right, so let's go through. Here's the S&P. We're going to kind of walk through this, where we are, why you might be short that market now. Let's just kind of eliminate some of the right-hand side of the chart here. Remember, we had this swing low here on the ES. This is the daily chart. We'll take a decision point off of that level. We knew that this level down here may be an important support level. And as the market came into that level, right, this big black candle here obviously looks like a lot of selling going on, but we had this red high volume spike on that gray candle. That's an indication that there's unusual volume activity there. When it's followed then the next day, in this case by the blue buyers candle, it's telling us that the buyers are now overcoming sellers in this major support area, and therefore we anticipate that this high volume is being created by professional buying. And so this was an area you could get long. We can look at, here is the last swing high. We'll take our decision point off of there for the target. So we looked at this as a potential buying opportunity, right, with a nice risk reward, low risk, high reward scenario. Now the other thing that we knew is that this swing down here, if we take a look at the wave pattern here, was a wave 3. All right, so the potential was this rally might have gotten cut short if we project up wave 4. Remember, we did this all in the weekly market update before the markets reached these levels. We projected these levels in advance. All right, so here was the wave 4, and this is the area we said if you're along this, watch this area, because if you get a red seller's candle in this area, all right, then you want to protect, move your stop to break even. Which you could have done at the 100% initial risk line anyway, but it's right around that area. But you can see that rally, you had nothing but black candles in here, and in fact you got a blue buyer's candle in this area, and so there was no indication that sellers were stepping in at all in the wave 4 area, and they just took it out and rallied. And again, because this was a high volume spike, if this is professional buying, these moves typically are not small. So that's why these are good areas to look to get into, because if the professionals are behind it, the tendency is you're going to get a good move there. So moved right into the decision point resistance on the daily chart. That's also a level on the weekly chart. So on the weekly chart here, you can see we have a decision point sell signal. Remember last week we said we wanted to wait and see, do we get a red seller's candle to close out the week? We got that this past week. So in conjunction, obviously, we also were aware that this was a wave 5 pattern to the upside. In other words, a potential trend termination. Right, so you can see the target there around 1712, 1713 area on the weekly chart. All right, that's if they break the Friday's low. Now we had a contract rollover. This is a continuous contract, so just keep in mind prices might be different, but we've got to break Friday's low in order to, or the week's low, I should say, last week's low, and that would then make this in play. Let me just go back to the daily chart, because on the daily chart, obviously, let's go back here to our level here. So once we came into this area to get a head start, now we use the weekly chart as the chart to map out the major support and resistance. This is where the DP came in on the weekly chart, right? But we can get a little better risk reward scenario on the daily chart. For a target here, if I'm just going to right click, I'm just going to ask the software, is there any pattern coming in here? Let's just choose Elliott Wave Intermediate. You see here's the wave 2 or B. All right, so it's a support area around that 18.0, 18.10 we'll call it. So let's just do the risk reward calculation to that target and see if we've got twice our initial risk there. Again, if you have the software, you'd already be short this. You'd already have your stop to break even now that the 100% initial risk line is achieved. We may get some type of rally. Again, it might be quiet early in the week. We'll see what the Fed has to say, and then the options expiration at the end of the week, all going to have some kind of effect on the markets here. But anyway, there's the target on the continuous contract, the ES 18, we'll call it 1810. Right, and then the monthly chart also, just to kind of working our way back here. Remember, this was the last prominent swing high. The October high is in 2007, so we take a decision point off of that level. And so here again was a level that we had some major resistance, and you can see it's beginning to struggle up in this area. And we'll see. We got a close on the, we'll see how we close the month out. The monthly candle currently is a red, but we got to see how that closes as well. All right, so you could be short from the daily chart. If the weekly chart gives way this week, then we may get that more selling, and you probably hit the daily target on that. All right, let's look at silver here. This is the weekly chart, and again, let's just step through this so we know what we're doing here. We had our 5-wave pattern up. Here's our correction back to the wave 4 DP, which we anticipate if they've come up here, they should correct at a minimum back to this level. All right, so we got our correction. This unfolded. Let me back this off a little bit. This unfolded, if we look at this swing here, as that potential wave 4. And so this leg down was looking like a potential wave 5. We had our targets. I'll project it here. Let's go wave 5 down. But we haven't quite been able to make it down there. And now you've got this the whole situation here with the Ukraine and Crimea and Russia and all that's going on there. So it's making this market a little more volatile. So we've seen some pops to the upside, some sell-off all around the 50 period moving average, the red line here. You can see the wave 5 target didn't quite get there. Found some resistance here. It's been kind of moving on news from overseas there. And if we look at the daily chart, all right, the daily chart, we do have a little pattern here on the daily chart as well. So it came into a wave 4 here, so let's project wave 5 and give the long side some targets here. So up wave 5, 1, and 5. So right around that 22.10 area will be your minimum wave 5 target. Just above that's your typical wave 5 target. And you also have some decision point resistance off of the wave 3 swing here, all in that area, between that 22 and 2280 area, we'll call it. All right, so we'll see. Let me just go back to the weekly chart here. Remember, if you are short this, all right, that you have your stop at 20, around that 2290, 23 level, somewhere in there. All right, so it's a risk-free trade to the short side. If you're long, you've got your targets there. Again, I'm still not convinced that the bottom is in here. I think a lot of this is related to the overseas action. And if that does settle down there, then these markets might settle down as well. We'll see. Obviously, the Fed announcement and what happens there will also play into all this. So we'll see. The bottom could be in silver, and we're starting a new trend to the upside. Like I said, if that's the case, we'll get a move through these areas. We can be a buyer on a pullback and a new trend and so forth. If not, and this thing does roll over, then you know, the target's still there. Hopefully the trade still stays intact. And since we're on silver, let's look at gold. All right, gold on the weekly chart here. You know, you had just a standard trade set up here. You see the target there around 1405 and change on the weekly chart here. This is in a better position than silver. It's breached its 50 period. All right, looking for the target there. Maybe, you know, maybe we'll see the 200 period at some point. We don't know. Daily chart. All right. Well, we've just got the one big. Let's just see what this looks like. A minor pattern there. Just a little minor 1, 2, 3 at the top there. So, again, this was in and around support. This is the daily chart here. That came in this these levels here and the rally there. But we'll see. We'll see how these fare this week with the Fed meeting and with the activity going on overseas there. And well, the other reason on the you know, if we look at the daily chart in gold, you know, this area here was a nice 5-wave pattern down here. So again, we would anticipate the correction back to the wave 4 DP. If this level gets taken out, which it has, then we go back to the top of wave 1, this wave here, because this is the level we anticipate. If they take this area out, they're going to wipe out the whole 5-wave pattern down. So let's take our decision point off of the top of wave 1. Okay, and there's the area. If they take this level out, we anticipate they're going to reach this level, which they just about have now. So that 1400 level, again, we had our weekly trade. If it hits the target on the weekly long there, right in that level, then we've got some overlapping resistance levels, and we'll see then if that holds as resistance, right, then we'll see if we get some selling coming in that level at that point. If it takes it out to the upside, well, then we can go, you know, continue to put our next levels there around that 1450, 1458 level. All right, so again, we'll keep an eye on that. It might be pretty volatile as we head into this week. All right, some of the option candidates that we're looking at that had their start dates. I think Boeing was the first one. The buy price or the buy date there was on the 12th of March, and it closed then at 124.43, and it's just trading below that. At least the close on Friday there, I think, was 123.11. All right, so we're waiting for a pullback, maybe into this area, but you can see Boeing is, you know, this gap down was that whole, I think, related to the Ukraine situation there, how it's going to affect their business. But these areas, here's your 50 period and your 200 period. Remember we talked about when the market's in a strong uptrend, the professionals, this is where they like to buy, below the 50 period, above the 200 period. Buy in here or in here. All right, so we're obviously in that level. The question we don't know is this trend over and a downtrend beginning? But seasonally, this is the time when this stock tends to rally. In fact, it's done so going back to 2003 every year. It's been positive between the 12th of March and the end of April. So we'll see if that picks up here. Also, now Beam was one that came up on the list, but it's was a takeover target. So 83.24 was the buy price there, but you see the big gap that was acquired. So don't put a lot of weight on that one. Avon, AVP. All right, this one is interesting. We got a buy signal here on the daily chart here. and you can see the setup there. But the interesting thing, like I said, is this stock now going back. Probably easier to see on the weekly chart here. If you go to the weekly chart, you can see going all the way back. Here's back in 99, 98. This area has been a major area of support. You can see where these DPs have come in. All right, so here's where we are currently. All right, so we're in that area, or just to the bottom of that area, or the top of that area, I should say. All right, so you got a wave 3 pattern here on the weekly chart. Here's the wave 4. Next level of resistance there on the weekly chart. So this one should be interesting. All right, and then Hershey's. All right, 105.45 was the buy price there. Closed at 106.20, so that one's up there. And this one, again, you can see here's your 50 period and your 200 period, and these have all been, good opportunities to buy below that 50 period, above the 200 period. Now it's gotten extended, but it is in a seasonal period where it tends to rally. In this case, March 11th to April 4th. No, I take that back. March 11th through May 6th. Okay. So we'll see how that fares. All right, we'll leave it here. Again, a big week with the Fed meeting, quadruple witching options expiration, and the events happening or unfolding here. I guess they're voting on this Crimea, wants to go back to Russia, it looks like. So we'll see how that all unfolds, but it's going to cause probably a lot of volatility, maybe quiet early in the week. Things are going to pick up midweek into the end of the week. All right, so enjoy the week, though. Have a good trading week. We'll see you back next week and how this all plays.